Most people have a checking account with a traditional bank, while a majority of those also have savings accounts. But what about credit unions? Should some people use those rather than traditional banks? What are the benefits? To answer those questions, in this episode of the podcast, I talk with Grant Gallagher of Affinity Federal Credit Union about the benefits of credit unions and why you should consider putting your money there.
Well, my guest today is Grant Gallagher, who has been a key part of the credit union movement at Affinity Federal Credit Union since 2009. Serving as the Director of Financial Wellbeing and Brand Communications, he leads the credit union's financial learning, financial well-being, brand communications, and political and regulatory advocacy programs. He also serves as treasurer of the Affinity Federal's Political Action Committee. Grant frequently volunteers with the Affinity Federal Credit Union Foundation, as well as serving as the secretary on the board for the New Jersey Coalition for Financial Education since 2015. Additionally, Grant has delivered thousands of hours of financial education to the community over the past decade. Welcome to the show, Grant.
Thanks for having me, Steve.
Yeah, we're all about financial education here, so you
Love
came
it.
to the right place. Uh, and of course, we've all heard of credit unions. I have dealt with them to some extent in my bankruptcy practice,
Yep.
but I've always been curious about them and how they differ from traditional banks. And I'm
Yep.
sure a lot of the listeners are interested in that. So obviously, the first question is, well, what do credit unions offer that you can't find at other banks?
Well, that's a great question. And Steve, believe it or not, there is a pretty common misconception that we have in the credit union industry where people think it's some super exclusive club where, you need to know a guy or, have a back alley deal to get into one. Well, the modern credit union, most anybody can join through a variety of different ways. So we are a membership-based organization. We are a not-for-profit. We are cooperatives. So, all of these things we tend to think makes us a better banking option because we're really focused on our members and what helps improve their financial lives and not so focused on the profit side of things where, you kind of see from more of the traditional banking sector where it's mostly profit driven. Well, we're looking at it from what's best for our members, how can we bring the most value to them, and because we're not for profit, we of course make profit, but anything we do, we're putting it back into our products and services to provide more value to our members.
Okay, so more because you're a nonprofit, you can provide more value. You're not looking to the almighty dollar.
Yeah.
Uh, Truman once said of banks that they're happy to lend you money if you can prove you don't need it. Uh, so yeah, it seems to be the kinder, gentler bank. Although I'm sure there are a lot of traditional banks that sort of present themselves that way.
Sure.
Uh, but this is a group. It's not like it kind of described like a country club or something. It's not a country club. You got to get
No.
a referral or someone to sponsor you or some such thing as that. But there is. I have seen that some credit unions are a little niche, like you see the Navy Federal Credit Union and
Yep.
things like that. Are there credit unions that serve particular areas of the community or particular groups?
There are. So, pretty much all credit unions do have some sort of service area or membership eligibility criteria, but it really runs the gamut. So, there are some that are just specifically for certain communities.
Mhm.
Affinity actually does have a couple of those community charters in New Jersey. There's some that are statewide chartered credit unions in other states. I don't think there's any state chartered in New Jersey. But kind of the most common credit union that you'll come across is some affinity group or employer-based one. And that's where you'll see like the Navy Federal, where it's anybody who's in the Navy qualifies for it. There's some, big ones in California and Florida that are teachers-based credit unions. So if you're a teacher in that state, you can join them. But Affinity has really built up over the years over 3,000 different organizations in the state that we do partner with. So, it's actually probably harder to find a person that's not eligible than somebody that is if you wanted to come in and join our credit union. But there really is, if you want to join a credit union, you can find one that you qualify for without a doubt.
Now you said something about affinity based. I mean,
Yes.
your the name of your credit union is Affinity, but what do you mean by affinity based?
So we'll call them affinity groups, like right. So somebody who's joining a club or a nonprofit or some sort of other organization that has some sort of common interest that they're working towards. Um, it's a little bit of a niche topic.
Oh, so if you have an affinity for a particular thing,
Yes.
that
Yes.
particular thing may have an affinity based credit union.
Exactly.
Okay. So I know I think the federal employees have a credit union.
They sure do.
So yeah, all sorts of different groups. But getting back to my question, I mean, the philosophy is different in that it's a nonprofit, and it's a credit union. I guess everybody's a member of the union.
Correct.
But in terms of financial services, are there particular financial services that are particularly offered by credit unions as opposed to traditional banks, or are they kind of the same service but better on a certain level or in a certain way?
Yeah, so it's a lot of the same basic financial services and tools you would find at your traditional financial institution, typically for a little bit better rates, lower fees, things like that. But because we are so focused on our membership, there are some additional add-ons, some benefits, some things like that. Like at Affinity, we have free credit counseling services for our members. If they want to meet and, get counseling, create a budget, work towards improving their credit to some sort of big purchase like getting a car or buying a home, they can do that with us completely free of charge. We have those relationships. We've also recently launched a partnership with Greenlight, which is a youth and parent based solution where it's basically like the parents can set up chores and education for their kids, monitor their spending and all that. That's usually a paid service, but we've created that partnership so that our members get it completely free of charge. We have some other examples here. One of the things that we've seen is our members they struggle with estate planning. That's kind of a big tough topic that nobody wants to talk about. It's expensive if you're really meeting with a lawyer to go through all those things or a financial planner. So, we've partnered with another partner of ours, Legal Karma, and they've offer reduced and subsidized services through them where it's kind of a DIY document situation. But you can basically walk out the door with a package for only a few $100s where if you met with an attorney or a financial advisor, it could be in the thousands.
Hey, hey.
Sorry. I'm not trying to throw any shade towards you, but you know how much these things cost.
Oh, I do. Uh, but that's interesting to know because as an attorney who has a bankruptcy practice, I and a podcast such as this, two of the things that you mentioned are really perked up my ears. I mean, as far as free credit counseling, uh, people often ask me, "Look, my credit's trashed. I'm
Yep.
getting a fresh start in bankruptcy. How do I rebuild it?" And I
Yep.
tell people, well, you know uh, filing bankruptcy is not like breaking a mirror. It's not 7 years bad credit. It's what
Yep.
you do to rebuild that credit after you've gotten your discharge.
Right.
And it's very possible to rebuild it. And there are different ways of doing that. And really, that's why it's called credit history, because
Yeah.
after a while, your bankruptcy goes from being credit history to being credit ancient history
Yep.
and it has less and less of an impact. So maybe that's something I can recommend to my clients and say, look, you might want to look into a credit union
Yep.
or your banking to help you with the credit counseling to rebuild your credit, to get some ideas. They can help you. But also and I just finished recording an episode yesterday. I up the one that uploaded today. I'm sorry,
Hmm.
is on, and I've done several of these on talking to your kids about money.
Yeah.
And I uploaded this one recent one. He said, well, he talked more about saving and investing because oftentimes financial literacy is taught in terms of budgeting and
Sure.
money and credit, how that works, how loans work, everything else. But nobody really talks about short-term and long-term spending habits.
Right.
That's what he got into. And I've talked to, other people about how to explain financial concepts to your children. What age do you start? Things like that.
Yeah.
And another person, it was more, all right, you're not your kids are going to grow up, but there's going to be a trust fund for them. So sort of the opposite. You're sending them out in the
Right.
world
Right.
in a different situation. And this one was about how how parents can teach their kids to handle it once it becomes theirs or once there
Yeah.
are adults and start getting the money from the trust, and to teach the as it were the trust fund babies on how to deal with that.
Yeah. Well, and the reality is, I mean, we're kind of in a situation where even just looking over the last 10 years of finance, the tools and the approaches, what would be relevant then is not necessarily relevant now. So it's like teaching your kids about money needs to be an ongoing conversation, right?
Yes.
And you need to make sure that you're talking to them at every level, building on it. And that's one of the great things about this Greenlight tool is not only is it actually assigning chores and giving allowance and monitoring their spending, but it's also education modules built in that's age relevant for every age along the way, starting as low as, what is money and what is trade, all the way up to like understanding insurance and investing in those more complicated topics of the teenagers. So I mean, it really is a huge thing that we saw that our parent members struggled with, and we wanted to answer the call. We're like, how can we help you with this? How can we improve your financial life? Because you already got so many other stressful things as a parent. You're trying to figure out, let's make the money part of it a little less complicated, right?
Right. And any parent, wants their kids to have better than they did.
Yeah,
So
yeah,
from the point of view of my bankruptcy clients, I said, look, this is a way of you got into financial difficulty because nobody told you
yeah,
about this stuff and you
yeah,
got into financial difficulty. You don't want that for your kids. So financial literacy, which unfortunately is not taught in our schools, most of them,
yeah.
but being part of a credit union is a great thing that you do for your kids because it helps with teaching them financial literacy.
Yeah. And Steve, I did want to go back to something you mentioned before where the history of credit unions is on helping those with meager means. It's people helping people, it's helping those of meager means and helping those that need a hand up. So we get a ton of people who are in that situation where they went through bankruptcy or they're really struggling financially. And we have secured products that can help them rebuild their credit. We have the credit counseling things. Most of our products are basically, no fee, no minimum balance. If you do more with us, you get more with us. But the barrier to get in is, basically nothing.
Right. Well, we've already talked. My next question, I was looking at my next question here on the list, and we've kind of gone over and answered some of it on some of the financial and community offerings that credit unions and I guess, Affinity specifically provide. Are
Yeah.
there any others other than what we've talked about? I just want to make sure we cover everything.
No, no, I appreciate that. And I did want to, just kind of call out that we do focus a lot on our communities as well, and what we're doing for our communities. I mean, we do a ton of financial literacy. Like, don't get me wrong. We are out there. And last year we did like over 200, I think it was over 230 different events and seminars for our members and our communities, include schools, nonprofits, everything. But we have a relationship with Gallup, and they've been doing research on well-being for over the past, I think it's like 15 or 20 years.
Mhm.
And, one of the conclusions that they came out of this is that there's 5 elements that goes into somebody's just holistic well-being.
Mhm.
And it's their financial, physical, career, social, and community.
Mhm.
So as a financial institution, obviously we can do a lot for their financial well-being,
Mhm.
not so much we can probably do for their physical, career, or social, but we believe on being a active, proactive member of the community and being out there supporting your communities. It's not just the education piece of it. We also have very comprehensive volunteerism programs. We have a 501c3 foundation that works with local nonprofits, doing scholarship programs, doing charitable grants. Um, we're there. We're trying to give back and trying to be a active participant to support our communities, because we live there too. We're local members of the community, just like everybody else.
So, talk about that the credit unions have a member-owned business model.
Yeah.
Now, how does that shape operations day to day for a credit union as opposed to a bank? Obviously, you're not focused on, return on investment in the bottom line and making a profit and things like that.
Yep.
So that creates other priorities and I guess other workflows,
Yeah.
how you operate. So how does that influence we've been talking about how a credit union can influence and help their members and the community.
Yeah.
How does that work internally?
So you hit the nail on the head where we're able to focus on our members, focus on what matters to them. We have that different approach where we're trying to constantly understand what those pain points are, what those needs are, what are the gaps in the marketplace. And we do it just by listening to those members. We have something we call our wellbeing coaches. They go through a year-long certification course on just basically a deeper dive into finance, a deeper dive into having conversations with people, a deeper dive into understanding just how to approach these sensitive, complicated financial topics. And those are open and free to all of our members to meet with for one-on-one counseling sessions. And this really helps us give that meaningful impact to our members. That's something where if you were going to another financial institution, they would probably ultimately be focused on making a sale. Well, that's not the goal of these folks. The folks these coaches are there for the member to come in, explain their situation, explain what their goal is, explain what their concerns are, and our coach to help get them there. So, that is probably, it might be profitable in some sort of way, but that's not our goal. It really is a different approach. And same thing with those green light and those legal karma solutions that I mentioned before. Those came from us listening to our members, asking them what they needed, and trying to just understand what their pain points in their financial life are. We have some nice savings and checking products too that we try to make as beneficial as possible to the members. But again, they're not focused on being profit-driven products. It's about providing our members value, providing them a competitive option in the marketplace, because we know how hard it is. It's every day it seems to get a little bit tougher for people in their finances. So we're trying to give them that leg up where they can get ahead.
Well, that raises a good question too, because in this day and age with inflation being what it is, and they're trying to control it with interest rates, and the housing market has become so problematic, and there's such a low inventory of homes for sale because who'd want to sell a home when you got a 3% mortgage,
right?
Mortgage rate these days.
Right.
So since you're not focused on that profit aspect of it, how do credit unions compare in terms of interest rates offered to their members as far as depositors, but also interest rates in terms of financing, like a mortgage or a car loan?
Yeah. So pretty much across the board, we're competitive or doing a little bit better than competitive. A couple of the products that we currently have that are really focused on our most engaged members. We have a Cashback Plus account that offers cashback on debit card purchases. There's not a lot of those out in the marketplace, so we feel pretty good about that. That offers 10% back on the first $150 in debit card purchases. We have a high yield checking account that earns 5.5% APY on balances up to $15,000. And then we also have a performance savings account that earns 3.25 APY on balances up to $250,000. Now, of course, I do have to say, check the requirements to qualify, visit us on affinityfcu.com for all the small fine print. There is a requirement for direct deposit and a number of debit card swipes per month. But for the average consumer that just has bills to pay and gets a paycheck, you can meet those requirements pretty easily. So I've looked around. There aren't a lot of offerings that compete with that. I use these products myself, and so do pretty much all of my colleagues because we believe in them. We like them. Yeah.
Well, and just as a caveat to the folks out there, and we talked about this before we hit record, we're recording this episode on April 25th, and it'll be released in July. So,
Yep.
folks out there, when we're talking about these rates, understand we're talking about rates as of April 25th of
As of April
2025.
25th.
So, if you go out to Affinity Federal Credit Union and in July or August or whatever, and you say, "Hey, wait a minute, how come you're on?" Was told you had these rates. Understand that things do change even for nonprofit credit unions.
Steve, if I had my crystal ball, I would quote those rates for the future, but it's not working today.
But also to people that are struggling and that maybe have not established credit or have the ability to get these credit cards that have these rewards. Having rewards on a debit card. If they're using a debit card, wait, I can get cash back and credit card
Yeah.
rewards that you would ordinarily get with a credit card, I can get
Yep.
with a debit card. Now it's what you said 10% up to $150. It's $15.
Sure.
But
Sure.
it's still $15.
It is, yes, that is better than nothing. You do that over a year span, that's a couple of bills there.
Well, now on each purchase up to 150 or the first 150 per month in purchases?
The first 150 per month.
Oh, okay. But yeah, that's that. And what happens after that? Does it stop, or is it just a lower cashback rate? Or
You're not getting any additional on the swipes, but it does pay interest on the account. So there's still that.
all right, yeah, you're making, and that was quite an interest rate on a checking account. I mean,
Yeah.
ordinarily a savings account, you think it's not so much money in, money out, and they usually offer higher rates, but have that on a checking accounts because a lot of folks in financial difficulty, what's a savings account? Uh,
Yep.
so
Yep.
if they can get these kind of interest rates on a checking account,
Yeah.
then that's great.
Yeah. I mean, we want what's best for our members and to help them save and, ensure they have the means to reach their financial dreams. So, that's really focused on drawing in those members that are going to come to us and use us for everything, and they'll reap the benefits if they are using us to the full capability.
Mhm. And one of my other questions on the list, and again, we may have covered it already, but let's make sure we cover everything. How do credit unions create financial tools and resources that address the real needs of their communities and maybe some of the underserved areas of communities that need a lot of these benefits that credit
Yeah.
unions provide that a bank wouldn't even consider offering them?
Yeah. I mean, a lot of it goes back to just listening to our members and listening to our communities. And we do that in a few different ways. We have a regular member surveying program that goes out that asks them about their financial concerns, about what they're doing, about their interactions with us, the whole sorts of different things. And we read all of them. If you're sending us feedback, we read it. We respect your time that you've, given us the gift of feedback. So we go through that. That guides some of our approach. Those well-being coaches that I mentioned before, they come back and they give us insights into kind of what our member concerns and what their issues are, and any thoughts on what we can do to tackle those.
Mhm.
And we even meet with our frontline staff on regular basis to get that input from them as to what are the member concerns, what are their pain points, what can we do to make their financial life better and their experience with Affinity better.
Mhm.
And those are ongoing working groups and ongoing projects to come up with ideas and innovation. And actually, one of our other products that I didn't mention, which is a Smart Start savings account, which is a inverted tier savings account, came from one of those feedback sessions from our community. We were really trying to come up with a way to help people save an initial emergency savings fund.
Mhm.
And by having an account that kind of inverts the tiers so the lowest amount is earning the most, it helps really accelerate that emergency savings.
What do you mean by inversion? You kind of lost me on that.
So,
And I want
yes.
to talk to you about emergency funds because they're very important, and
Yes.
I talk about it all the time on the show. And I want to talk about how you guys help people with that. But what
Yeah.
do you mean by inversion as far as you mentioned interest rates? I mean, how does
Yeah.
it work?
So the traditional tier structure of a tiered savings account is, up the first tier usually earns the lowest and the top tier earns the most based off of your balance, right? So it's
Okay.
if you have $1,000, it's 1%, $2,000, 2%, so on and so forth.
Uh-huh.
So usually money markets have that sort of tiered structure.
Uh-huh.
Well, ours, the lowest tier of I think it's up to $1,000 has the highest interest rate, and then the additional amount on top of that is lower amounts. So I don't know the current amount there, but it was again a nice competitive rate at that lowest tier.
That's great because it's often difficult, to set aside money in an emergency fund.
Right.
Because you really kind of need that before you can do a lot of other kinds of savings, whether short term or long term or retirement savings and
Yep.
invest in things like that. You need that fund and you need to be able to replenish it.
Yep.
If you use the emergency fund, that means you got to put some money towards it again for hopefully there won't be another emergency, but you got to plan for it.
Yeah.
That sounds like a very interesting way of dealing with that in a savings account.
Well, and again, it goes back to us having the ability to not focus on the profit side of things, but focus on our members and their need. And not only did we, realize that philosophically it's challenging to save that emergency fund, but the other piece of it too was a lot of the time people will default to a certificate and then it'll be locked up and then it's hard to maneuver it without it paying any sort of penalty or fee. So, we came up with this account. It's completely liquid. It's got no minimum fees, no monthly fees, anything like that. So it really is focused on helping the members get that
Mhm.
leg up on that emergency savings.
Absolutely. Well, yeah, that's great news. And people out there think it's struggling with um, putting together an emergency fund. Yeah,
Yeah.
that's something you should think
Yeah.
about
It's
as far
hard.
as credit unions go. Uh, Now, I looking at my next question, it kind of loops back earlier. We were talking about financial literacy
Yep.
and teaching kids about money, teaching the parents about money.
Yeah.
Uh, so, I mean, it's like that, oh, you can lead that horse to water. You can tell them you should have an emergency fund. You should put a certain amount you should build it up to a certain level. You should put a certain amount aside towards that. You should have a budget.
Yep.
And then, yeah, okay.
Uh-huh.
How to do that. How does it go from knowledge to habit
Yeah.
where it sticks? How do you help folks with that?
Yeah. So and that is probably one of the biggest challenges in the financial literacy space, right?
Mhm.
Um, we've seen over the years just so many things change, and I think you had mentioned at the top of the uh, podcast in my bio that I've been at Affinity for 15 years. Well, every one of those 15 years, we've honed and refined and added and updated our content to make sure it's current and relevant and approachable to our audience. But also, not everybody has the same learning style. I myself will not pick up half as much if it's just a presentation or a seminar or somebody talking at me versus if I can actually be hands-on and trying things and doing stuff myself. So, I mean, of course, we have the traditional webinars, seminars, content like that.
Mhm.
But we have a whole interactive on demand online platform that has interactive courses, videos, articles, podcasts, things like that. So it's like you can, and the tools are interactive where you can play with your own budget, play with the numbers, create it, go and test it, just go through these different scenarios of what does it look like if I do this and what does it look like if I do that? Because, a paper budgeting sheet just doesn't get you there, right? Um, so that helps really get people to understand, take that next step of just kind of topical, like, yeah, okay, whatever you say, to, yeah, no, I get it. but the other piece of it too is, and I'm going to go back to those well-being coaches I mentioned earlier. That's kind of where the deep personalized guidance comes in, where people that are in a tough situation who, they know what their goal is, they have concerns, and they kind of know what some of the barriers are. Well, that's when we can help them figure out how to connect A to B and address those concerns.
Uh-huh.
And when you're getting that level of personalized, customized guidance that is relevant and speaking to your specific situation, well, you're going to remember it. It's going to be relatable. It's going to be memorable. You're going to stick to it. And, we've had members come back after we've put together a plan and, they couldn't keep up with it. Life changes, reality changes, and we helped rework it for them. But that's kind of one of the biggest barriers that we see is they're afraid to ask. If they get in a tough spot, they're embarrassed about the situation. So that's really a lot of what we're trying to tackle too, is breaking that stigma of, just because you made a bad financial decision doesn't make you a bad person. Everybody makes mistakes.
And
Come
learn
come
from it.
to
How
us.
do you
Yeah,
learn?
let us help you. Um,
Well,
and if you don't mind, another really awesome program that we have is called a Financial Reality Fair. And this is focused on high school and college students in our communities, where the students will come in and they'll go through a simulation where they have to make all sorts of choices around their post-graduation life. We'll give them a job and an income, and then they need to make decisions around their housing, their groceries, their transportation, their insurance, all of that, and they have to come out the other end after going through, I think it's about 17 or 18 booths, with a budget that works. And if they don't, we kick them back over to a part-time job table, or back to the table where they overspent, for them to rework their budget. And they enjoy that. They come out the other end just kind of having a better idea of what post-graduation life looks like, and just how hard it is to create an actual functional budget.
yeah. Well, I wanted to, this is obviously an ongoing process that you do, not just a
Yeah,
few classes for people, but I want to talk about a couple things, goals and accountability.
yeah,
I've talked to lots of folks on the podcast about how having a goal can help you stay on your plan. If you find
yep,
that this is a goal that you really want, that you're passionate about, that you want to make happen, then you're more likely to stick to what you're taught.
yeah.
So I would think that part of what you do is sort of finding your why, finding that goal. What do you want to accomplish? And here's the path towards it, right?
Well, and that's exactly it. When we go through a budgeting exercise with anybody, we have what are your goals as the start of that conversation, and they are at the top of the sheet. Because if the budget is not built around their goals, if it's not based around what matters to them, they're not going to do it. You might as well just not go through the exercise, because if it's not meaningful to them, they're not going to follow it. And a budget that you're not going to follow is as useless as, the piece of paper it's written on.
Mhm.
So the reality is that's a kind of at the focus of everything that we do with our memberships is, figure out what matters to you. And even if I think it's silly, if it matters to you, then it's important.
Mhm. And there's a certain baseline to that. I mean, aside from goals, your basic goal is not to go broke.
Right.
You
Right.
know, I don't want to have to go see Steve Richardson for a bankruptcy,
Hmm.
and that can be a goal. But it's your goal is to be at least financially solvent.
Yeah. Yeah.
That's your first goal, and then once you've established, because if you don't have that, it doesn't matter what your other goals are, and you're
Right.
going to fail.
Right.
So you start with maybe some of the more achievable goals. Hit a single before you hit a home run,
Right.
and that gives you that positive feedback to continue towards the larger goals.
Yeah, we're big believers in building that momentum, setting things up into achievable bite-sized steps, but also having a short-term, a medium, and a long-term goal. So you at least always have something you're working towards. You always have that kind of optimistic outlook on your future.
Mm.
Um, but if your goal is just to go out, be able to afford to go out to dinner, once a month, that's a perfectly reasonable, achievable goal, and we'll help you figure out how to build a budget to achieve that.
Mhm.
Um, and if version one comes back and doesn't work for you, well, we'll figure out version two, you know?
Which brings up the other issue of accountability. It
Yeah.
often helps that if you're said, okay, this is what you got to do, this is your plan, we taught you everything, these are the tools, go.
Yeah.
But if it often helps to say, oh man, what am I going to tell, Grant next week at the meeting, that I haven't done anything, or I got to do
Yeah.
something, I got to have something to report back, and
Yeah.
that accountability can help keep you on track, help keep you disciplined, until you are ultimately accountable to yourself, and then that's successful enough. So how
Yeah.
do you create that accountability?
Well, one of the biggest mistakes that we see out there is people going into their finances as a single person and not as a financial unit or a family unit or however they actually manage their finances. I mean, even if you have a roommate that you're sharing rent with and utilities with, you should be doing your finances together. You should be figuring out your financial situation together if you kind of have a big shared financial responsibility. Families should go into budgeting as a family unit. They should talk about what's important to them. They should talk about where they can cut or add or move. One that helps increase accountability, but it also reduces the stress. If you're not the single person responsible for your whole family's finances and everybody is accountable for it, well, then it's less stressful and you're more open to having that conversation about, well, we can't exactly afford that. Nobody wants to tell their kids, no, we can't afford that. But if you've already talked to your kids about what your budget looks like and what you're hoping to achieve and what that, shiny goal at the end of the rainbow is, well, it's a much easier conversation than just being, the depressing.
Yeah, I lost you for a second there. But you don't want to be the bad guy to your kids.
Exactly. And
And
it's that much easier if you've already had some realistic conversations with them about what you can afford and where you're going with your finances.
mhm. And that keeps the family involved, and that promotes financial literacy with the children, or
Yep.
we're on this together, and they understand. Look, it's not that mom and dad don't want to get you that new iPhone or whatever it is,
Yep.
but mom and dad can't afford it right now, and here's
Right.
why.
Right.
So that certainly helps, and everybody benefits from that. So, all right, let's wrap this up before something happens technologically to our recording and our Zoom connection. Uh, so what's up right now? What does is Affinity up to, over the next few months and through the rest of 2025 that you want to tell the folks about?
Yeah, so I mean, I just want to go back to what I mentioned before with those accounts with the high yield checking and the cash back. Those are ongoing products that we're going to have for quite some time. So definitely check those out. We are constantly adding new products and services that are member focused and financial well-being focused. So by the time this publishes, we might have something that I don't even know about currently. As much as as much as I do, things keep popping up left and right, which is always awesome. But look for us in your community. We're constantly out there. We're constantly trying to give back to our communities and participate. And if you've never been to one of our branches, stop in and say hi. There's might be probably something I didn't cover here that might be of interest to you.
Mhm.
So talk to our staff. They're all very knowledgeable. They're friendly. They live in your community. So they'll be a great resource to you to help you out and get you where you want to go financially.
Terrific. And if something pops between now and when this publishes in July, let me know. We'll put the links in the show notes so
All
people
right. Awesome.
keep updated with what you guys are up to. But this is great. I mean, a lot of stuff I never knew about credit unions and how helpful they can be, and I'm glad we had this conversation. And I'm sure the listeners got a lot out of it, and I'll certainly promote it to my bankruptcy clients as something they should consider when it comes to financial literacy and rebuilding credit and all the things that they really need to do to have financial independence. So thanks for coming on the show, Grant. Appreciate it.
Thanks for having me, Steve. I appreciate the opportunity.
Mhm.